Hello and assalamu alaikum everyone. I am Kashif Kamran and welcome to the AAA March 2025 mock debrief. And today I am investigating the question number 20 and 21, which is basically Beats Company. And we'll try investigating this question, which is of 20 marks. And this is the first question of 20 marks we are taking because on the day two, I investigated a 30 marks question. The time management, just to recall, the time management we set on the day two is 36 minutes for the question number two, and that same will be for the question number three. That is the question we are starting now. The Beats Company will be a 20 marks question, and the total time allocation for this is 36 minutes, which includes the reading and planning time. Let's open this question on the practice platform and let's investigate what is being asked for. Okay, I hope you can see the practice platform in front of your screen with the mock exam. Please confirm that. I hope you can all see the AA pre-March 25 mock exam in front of your screens. And we're looking into the question number 20 and 21. Okay, let's open this question. This question is made around Beats Company. We were looking for the question for 30 marks on the day two. That was the Jambo communication. Now this is the Beats Company. Let's see what's the first question for 5 marks. ISA 315, identifying and assessing the risk of material misstatement, states that controls are embedded within the component of the entity's system of internal controls. Controls may be direct or indirect. Required, define direct controls and describe 3 examples of direct control other than authorization. So examining team wants you to define what a direct control is, and not just defining what a direct control is, you should also describe 3 examples of direct control other than authorization. But look at the words, the problem with the student. This word here says define, and this word says describe. There is no listing. You cannot just say examples of direct control and you write segregation of duty, bank reconciliation, logical controls. You need to describe them. It's not just putting a word like bank reconciliation. No, you need to explain them. Explain bank reconciliation as a direct control in like 2 sentences. So just let's go down with the 5 marks here quickly. This is the knowledge area. And how would you split the marks? You will define direct controls. You will be defining what direct controls are. And for that, you will take 2 marks. And then you will give 3 examples of the direct control. And for those 3 examples, you will be getting another 3 marks. That is 1 for each example. So that's how you build up your 5 marks. Now, I'm just giving you a definition of a direct control, which you should rephrase in your own words. And that's what you will be taking for exam paper. I'm writing it down, just concentrate. Direct controls refer to the specific controls designed by the organization to directly address a particular risk of material misstatement at an assertion level, meaning they are precise actions taken to prevent and detect errors in specific account balance or a class of transaction like bank reconciliation, logical access, and you can take one more like verifications. etc. Now you're given a definition for 2 marks. Direct controls are specific controls, right? Which are designed by the organization and which addresses a specific risk of material misstatement at an assertion level or at an account balance level or at a class of transaction level. So they're addressing the specific risk at the balance sheet level. They're addressing a specific risk at the income statement level. Class of transaction is basically the items of income and expenses, and the account balances are items of assets and liabilities. And you know the assertions: existence, completeness, occurrence, rights and obligation, valuation. So cut off, these are all assertions. So this is a definition which you can learn and take to the exam hall. 3 examples. I've already given 3 examples. Now I would describe them. Now I would explain them. Number one, let's go down with bank reconciliation. Bank reconciliation. And in terms of bank reconciliation, uh, the reconciliation helps ensure that the balances between bank and the company are agreed at all times, and any reconciling items are specifically known to the organization. The purpose of reconciliation is to ensure completeness and accuracy of the bank balance, of the cash and bank balance. So bank reconciliations, we know, is a direct control because it's specifically addressing the area of cash and bank. It's specifically ensuring that the balance as per the bank statement and the balance as per the company's book is in reconciliation, and any reconciling items are known to the management and the reason of those reconciling items. So any reconciling items are specifically known to the organization, including the reason thereof. The purpose of reconciliation is to ensure completeness of the balance as well as accuracy of the balance between the bank statement and the company's book. Now, that's one example. The second example is a logical access and verification. Let's go first down with verification. Verification is another example. That's you verify 2 sets of document. So basically, verification means to compare 2 documents. For example, comparing the good receiving note with the purchase order to ensure only those goods are received which were ordered. Only those goods are received which were ordered. Verification helps with the overall validity, of the transaction. So the goods you ordered is the goods you received. So that means the goods you received were valid. Verification helps with the overall validity of the transaction and ensure completeness. So if you ordered 10 goods, you have received 10 goods and on the same description. So it's ensure completeness of your order, and it also ensures validity of what you ordered. So verification is another example of a good control. Then next you move on and you say logical access. We know logical access are like passwords. The logical access, like passwords, help protect the uh, confidential or important information from unauthorized access or alteration, thus ensuring, thus assuring the credibility and reliability of the financial data, including the accuracy of the financial data. So you are ensuring that your information is not being altered, or your information is not being manipulated by any unauthorized person. So the integrity, right? The integrity of the information, that's the more important word, ensuring credibility and reliability of the financial data, including integrity. So that's what this particular control is ensuring. Even segregation of duty is a direct control. So you can write about that as well. Authorization itself is a direct control, but the examiner said you should not write about it. So direct control, how you define it, and direct control, the examples. Now look at the way I explained every example. Describe the examples, not list the example. Is everyone clear? So this is how you get 5 marks. I was even demonstrating the 5 marks we got in the previous question, where we want to explain the importance of planning. And I mentioned that point, that the students generally don't score 5 out of 5 in a knowledge question. These are scoring opportunities, and you can easily score 5 out of 5 if you define a direct control and then you give 3 examples and you explain them. Now look at my answer. You can learn this because we know knowledge is very repetitive. You might be lucky enough if the same question comes to your exam paper in March. Is everyone clear with this answer? Should we move on? Just waiting for your confirmation. Should we move on, all of you? Okay, great. Now, how many of you have done this knowledge question before on direct controls and examples of direct control in your prior papers or in any practice of the papers you've done so far? Okay, let's move on to the next one. So are you now clear, Mango, how to go about it? Will you remember the definition of a direct control, and will you remember the examples for your exam paper if it comes to your real exam? Okay, just let's go to the next part of the same question, which is around the Beats company. And now we have another 15 marks question on Beats company. This time, yeah, we need to look into the case study. A very typical question. Internal controls is a very favorite area of Section B, just like audit risk and responses we have earlier done. In respect of the internal controls at Beats company, identify and explain 5 deficiencies, not less than 5, not more than 5, only 5 deficiencies. Uh, recommend a control to address each deficiency. That is the recommendation. And finally, after the recommendation, a test of control the auditor should perform to ensure that the controls are operating effectively. Now, when you perform a test of control, look at this. If implemented, now the control you are recommending in 2 above. So if there is a deficiency and you tell this is the best way to overcome the deficiency, now you assume that the control which you have recommended in 2 above has been implemented by the management. And then you perform a test of control, assuming that the control you recommended in 2 above is operating. So deficiency, control, and a test of control, assuming that the control you mentioned in part 2 has been implemented. So we have 15 marks, one for deficiency, one for control, one for test of control. and we need to do a total of 5. Now, a question like such is done in a table form. So you will put a table, and you will put a table with 3 columns, and you need total of 5. 1, 2, 3, 4, 5. So you put a table, and in this first column, sorry, I think we need to add one more to it. Table. Okay. So we need to write over here the deficiency in the column 1, then the control recommendation, the control you will recommend to overcome the deficiency, and finally your test of controls. I'll just be doing 1 and 2 with you, just to give you an idea how would you go about making a list of 5. Let's read. It is the 1st of July. You are the audit supervisor at Sound and Company, and are in process of reviewing narrative and transaction cycles at Beat, along with developing audit programs for the final upcoming audit. Beat manufactures and sell wide range of portable music players. Beat sells to individual customers via website and also retailers through a network of sales staff. Now comes the system. We have a purchase and a good receipt system, and we have a sale and a dispatch system. And from both the systems, the total number of mistakes you need to identify is 5. Let's go one by one. The production department at Beats work on just in time. Okay, that's good. Orders for necessary materials are dispatched by the computer system according to the preset reorder level. So the computer system automatically send the orders according to the preset reorder level. So that's computerized. The approved supplier were all set up in the system. So the system knows to which supplier to order, because the approved suppliers were all set up in the system 2 years ago as part of the improvement in the integrated software. What is the problem in this whole paragraph? Try to pick up the issue in this paragraph. Just in time, that's very good. Computer system, that's very good. Pre-order levels, that's very good. The approved supplier, that's very good. And the orders are raised to the pre-approved suppliers. But the pre-approved suppliers were set up in the system 2 years ago. Is that the problem 2 years ago? All of you? Do you believe the suppliers should be reviewed on an annual basis? Because there could be new suppliers who can come in. Some of the suppliers can be costly. Some of the suppliers could not give you value for money. Should you replace the suppliers who are not giving you value for money and bring the new one? So should you review the approved list of supplier every year? So to add the suppliers who are giving you value for money, and to deduct the suppliers who are not giving you value for money. So should you keep adjusting this list? You should, right? So the problem is that this was done 2 years ago, but since last 2 years, no one has reviewed the supplier list. So that becomes the deficiency. Let's see how you write the deficiency. The approved supplier were all set up in the system 2 years ago. Control C, and you bring down here. The approved suppliers were all set up in the system 2 years ago. This means that the suppliers are not reviewed on an annual basis, and this could mean that there could be suppliers in the list which are not offering value for money, or you might be ordering suppliers who you might be ordering suppliers who are offering higher prices because you have not reviewed the supplier list on an annual basis. What if you have an approved supplier in your list who's offering you the price of $12? Had you reviewed the supplier list, you would have got to know that there is a supplier in the market who is offering you $10. You could have incorporated that $10 supplier in your list and could have removed the $12 supplier, but you didn't did that. So that means there is a chance that you might be buying the goods at a higher price because you're not reviewing your approved supplier list on a timely basis. So that is the problem. That is a deficiency. What is the recommendation? The approved supplier list, the approved supplier list should at least be reviewed annually to incorporate any changes and to ensure the supplier list fits the definition of value for money. Value for money. So you have the best of the suppliers and also fitting the definition of economy, efficiency, and effectiveness, the value for money. Now, assuming the control is implemented, assuming that the management now annually reviews the supplier list, the management annually alters the supplier list, and this control has been implemented. Now, assuming that the control in the column number 2 is implemented, what test of control will you perform to ensure that the supplier list is being annually reviewed? Now, we know this is on a computer system. The supplier list is set up in the system. It's not manual. So probably we know when you alter something in the system, when you log in into the system, when you log out of the system, a log is being maintained. So the auditor can review the log of the system to ensure that when was the last time the supplier list was changed, or when was the last time the supplier list was altered in the system. So you will get to know the date on which it was altered. So if it was altered in the last 1 year, that's good. So you can review the log of the computer system, review the log of the computer system to ensure that when was the last time the system was logged in for the alteration of supplier list. Because the log will not only tell you the date and time, the log will also tell you the name of the person who logged in and also what was done the last time. Did you created something? Did you modified something? That is what the log do. So the last time the system was logged in for the alteration of the supplier list. So if that date is within a year, that means that the supplier list was uh, annually reviewed for changes. So this review of log will become a test of control. So you need to give a control recommendation, which is just the opposite of the deficiency, and you need to give a test of control. Okay, just let's go on to the next one. Deliveries are made within 12 hours by the supplier who invoice electronically when the goods are dispatched. So when the goods are dispatched, the supplier electronically send you the invoice, and generally, the moment you order, the goods are delivered within 12 hours of your order. Items are put into production within hours of arriving at Beats warehouse. So the moment the items arrive at the warehouse, they immediately go into production within hours. The team at the warehouse check the good received physically to ensure that the goods being put into production are of appropriate quality, or else production will be held. What is the issue? Uh, the team is checking the goods received physically to ensure that the goods being put into production are of appropriate quality. What is this team at the warehouse missing? What is the team at the warehouse not doing? Okay, they're not checking the quantity, they're not checking the goods received as per the purchase order. Are they verifying the good receiving note with the purchase order to know how much you ordered and what description of goods you ordered? Is that being checked? No. And we just read in the direct control that verification is a direct control. In verification, you have to compare the good receiving note with the purchase order to ensure that you're only receiving the goods which you ordered. You're not receiving the goods which you have not ordered. So the team at the warehouse check the good received physically, check the good received physically to ensure that the goods being put into production are of appropriate quality. They're just ensuring that the goods are of quality, but are they checking it against a document that what we ordered, what quantity we ordered, what quality we ordered? They're not checking it against something, right? They're just having a physical verification. So that's the problem. So let's copy this problem here. The team at the warehouse check the goods received physically to ensure that the goods being put into production are of appropriate quality. Control C, and we bring it down into the deficiency column. Control V, full stop. The team is only checking quality, but they are not checking. Sorry, the team is not checking the the good receiving note with the purchase order to confirm that only goods ordered are received. Only goods ordered are received. So the team is just doing a quality check. They're not comparing the good receiving note with the purchase order to confirm that the only goods ordered are received. You're not receiving any goods, or you're not receiving any description of goods which you have not ordered. What's the control recommendation? The control recommendation is simple. The team should the team should review the good receiving note with the purchase order and ensure uh, ensure that the goods receiving note is approved and remarks mentioned by the team. Suppose the team mentions the remark agreed, compared with purchase order, and signed. So at least you have any physical evidence on the GRN, uh, checked with PO, signed, checked with PO, signed, something like that. So as an auditor, when you're performing a test of control, you will simply review a sample of GRNs to ensure they have evidence or tick marks that the GRNs were checked back were checked back to PO and signed. So you will see some signatures on the GRNs. You will see some remarks on the GRN checked with PO, and someone must have signed it. So that sort of an evidence on the GRN would give you an assurance that the team at the warehouse is checking the GRN with the PO and signed. So I hope you're getting control of a question like such, which is very popular with the AA examiner, asking you a question to write deficiencies and control recommendations, or then asking you to write deficiency, control recommendation, and the test of control. So you're picking up the issue, you're picking up the weakness, and you're explaining why it is a weakness. And then more importantly, you're putting a control recommendation that how it should be mitigated. And assuming that the management has implemented the control you have recommended, what will be the test of control you should be developing? Remember, just like a substantive procedure, a test is a procedure of the auditor, the procedure to ensure that the controls are operating effectively. So the test has to start with an action, review, review. It can start with any action verb like observe, like reperform. So there could be any action verb with which you are starting the test. The control recommendation is just a recommendation which you will be giving in the exam paper, and that's just the opposite of the deficiency. Yeah, compare is also okay because compare demonstrate an action. And in deficiency, you will copy the deficiency from the scenario and then you will elaborate upon that deficiency, that why it is a deficiency. So for the supplier case, I did elaborated why it is a deficiency. And for the case of the team at the warehouse, I did elaborated that we could receive goods which were not ordered. That's basically the deficiency. So we could receive the goods which we have not ordered because we're not comparing them back to the purchase order. So in this way, you will fill up the table and you will go to a total of 5 deficiencies, 5 recommendations, and 5 test of controls. Is everyone clear with this? This is a typical question, right, which comes in AA. You will see this question almost in every single exam sitting. But please be assured you're not missing on the easy marks on knowledge questions, just like the direct control we got this exams in this mock exam. So knowing what a direct control is and knowing the examples of direct control can really help you boost your marks in the AA paper. Is everyone clear? Good. So I'm just ending this session. This is the session 3, which was looking around Beats Company, a 20 marks question. And I'll be sending you another link shortly of the session 4, which will cover the last question of this mock exam. So just stay tuned in the WhatsApp group and just wait for the link, another link coming your way in the next couple of minutes. Thank you so much for joining in this session. Take care, goodbye, and Allah Hafiz.